Singaporeans with 9 different retirement dreams.
Now I sell to customers, but I hope to participate more in charity bakes.
I would like to travel to other countries and learn languages like Arabic, French, Mandarin, Spanish.
Yes, I'm happily retired. I have more time with my family, with friends.
How are they preparing to make their dreams come true? Meet Melody Wong, a communications and branding specialist for more than 2 decades. She recently left her corporate job for the kitchen and is now a home baker.
My retirement dream is to pursue my interests and not trade my hours for money. I really love to cook and especially cook for my family. Now I sell to customers, but I hope to participate more in charity bakes, to support the community, volunteer, as well as letting people appreciate my cooking and baking. I decided to move into this direction of pursuing my passion, and I have enrolled in a chef culinary program in Italy for 2 months.
This is Norma Yaakob, a public service officer who is looking forward to an active life after retirement.
When I retire, I would want to enjoy my life holistically. Also, I would like to travel to other countries. Ni hao. I want to learn languages like Arabic, French, Spanish, and Mandarin for that matter. Urban farming has been my main interest. I was hoping to retire early, but we need to get some more money to carry out our plan. So we're looking at 65 to 67.
And this is Kandaswamy Segaran, who is more fondly known as Segaran. Retired 3 years ago, Segaran is now living his retirement dream.
I would say that I'm happily retired in the sense that I have more time with my family, with friends. At the same time, do a lot of walking. I do the household chores. I help out the Cinder as a program coordinator.
Ostrich, yeah, we tried sitting on an ostrich. It's not really comfortable, right?
Actually, my wife wanted to retire by the end of this year. We want to see a lot of countries or cities. In May, I would say, we managed to go to London, to Edinburgh, Glasgow. Although the weather was a bit cold, we managed to see a lot of nice sceneries and really enjoyed ourselves. Our target next year is to go to Portugal. And of course, we are also thinking of going to Croatia.
Three people with 3 different retirement dreams. What does financial expert Jolene Ong think of Melody, Norma and Segaran's plans?
Melody wants to be able to convert her passion into a source of income as well. For Norma, we know that she plans to work for as long as she can to build and accumulate more for her nest egg. That is certainly very wise because with longer life expectancy, as well as rising inflation, if she's in a position to continue working, why not? For Segaran, he's already in retirement. I think he can be a poster boy of what it takes to be engaged during retirement. For one thing, he's taking the effort to remain healthy by exercising, and he's also volunteering and traveling extensively. So I think he's really living it well.
So how did Segaran plan his money in order to live his retirement dream today? And how are Norma and Melody preparing financially for their golden years? Norma is thinking of delaying her retirement to accumulate more funds to pursue her passion for travelling. She started financial planning as soon as she entered the workforce.
I have this good friend. She was an insurance agent. She influenced me in terms of buying my first insurance policy. I learned about buying stocks and getting a broker. When I got married, I started to buy insurance policies for my husband and for my children. When I retire, I'm looking forward to having about $3,000 a month. The funds for my retirement will come from 3 sources. One is CPF Life. Then the second from my investments and my insurance endowment policies. The third one would definitely be my cash. CPF has 3 retirement sums: the basic, full, and enhanced. Currently, we're at full. We are still exploring on topping up to enhance so that we can actually have more payout later on. As for the payout payment, we're looking at the age of 70 because the payout will be higher when you're 70.
For Norma, first I must applaud her. She has started her investment journey very early. It's great that she and her husband have already achieved the full retirement sum, and they are also considering to top it up to the enhanced retirement sum. Now, by topping up, not only will it be able to give them higher lifelong payouts, but at the same time, the interest that she will be able to accrue from now till then, it will be 4% risk-free. That is important to her and her husband because when they are approaching retirement, they cannot afford to take on as much risk as before. In addition, Norma is ready to delay her CPF Life payouts. With every year of delaying, she would be able to enjoy up to 7% higher monthly payouts on a lifelong basis.
As for Melody, she recently quit her corporate job to pursue her passion for cooking and baking. Previously, she worked in China as a communications and branding specialist for 13 years.
When I was working overseas, I don't get CPF. So I needed to save my own money. I was able to save at least 50 to 60% of my pay. So I accumulated that for quite a number of years, and that helped me buy this property. I'm thankful that I have a small place that I fully paid for because I have commitments to my insurance, investments, and support my mom's health insurance as well. Not that I have a full retirement nest egg, but what I have now, I believe can tide me for at least a few years in terms of my cash. I believe I still have some skills in editing, writing. I should be able to supplement some of my income if I were to freelance. Also, my home baking business is bringing in some steady stream of pocket money. So in the short term, I have some of these and my savings.
Melody is in a fairly good position, I would say, because her house, she has already fully paid it off. So in terms of long-term liability, that's quite settled, and she has a good amount of savings. When she really kicks off her business, it may take some time for it to take up traction. And in the meantime, she may still have to fulfill her obligations towards her insurance, her own expenses, and her mother's expenses as well. I would actually advise a 6 months emergency savings for her to be able to maintain the current level of lifestyle that she has.
Should I cut into half or quarters?
Cut into quarters better.
Quarters, huh? Okay.
Meanwhile, Segran is enjoying the fruits of his labor. He retired 3 years ago.
My monthly expenses is basically about $1,000. The cost of living has gone up a bit. I make sure I'm very frugal in whatever I do. Whatever the essential things that I need for the house, I buy. Could be anything like milk or bread. What I will do basically is make sure that whatever I'm going to spend money on is necessary. Second thing is do cooking at home. I take public transport. It could be the bus or the MRT.
See how much rice you need now?
Yeah, a little bit more.
Sorry.
Segaran's main source of retirement income is CPF Life.
I'm getting about 1,200 per month. My wife did most of the retirement planning. At the age of 55, I already met my basic retirement sum. She topped up the amount further so that I can use the expenses for our future.
Inflation is a concern on most people's mind. We recognize that the cost of living is going up. What a person can practically do is to look at what Singaporean has done. He has differentiated between his needs and his wants. Clearly, our needs has to be covered first. With regards to our wants, we then may have to prioritize them. So setting a budget is important. I can't stress that enough because when you set a budget, that is your boundary.
Although Segaran has set aside enough funds to cover his current expenses, he is thinking of ways to supplement his retirement income.
I'm currently living in a maisonette. I'm thinking of right-sizing to a 3 or 4 room flat because walking up and down the stairs is a bit risky, I would say, and also tiring as you age. I'm hoping from the sale of the flat, I can use the extra funds for future expenses.
There are several housing monetization options that let seniors unlock the value of their HDB flat to supplement their retirement income.
Seniors should consider their needs, their preferences, and their family circumstances when looking at housing monetization options. So for example, if seniors feel that their current home has much more space than what they need, they might decide to right-size. For seniors who are looking at selling their current home and buying a 3-room or smaller HDB flat, they could enjoy the Silver Housing Bonus, or SHB in short. The SHB offers a cash bonus of up to $30,000 when seniors use part of their proceeds to top up their CPF retirement account and join CPF Life if eligible. So if seniors prefer to move out to stay with their family members for mutual care and support, they could choose to rent out their entire flat. So seniors who prefer to stay in their current flat, they could choose to rent out their spare bedrooms. Another option is to join the lease buyback scheme. This lets seniors unlock the value of their tail-end lease and receive monthly payouts for life through CPF Life while they continue to stay in the same flat. They will also receive cash bonus of up to $30,000 depending on the flat type and top-up amount to their CPF retirement account.
Housing monetization is a good way to supplement one's retirement income. Investing is another, although there are pitfalls and risks to watch out for. How can one avoid losing his or her precious life savings before retirement? Investing is a good way to grow one's retirement income. But one will first need to get the fundamentals right.
Before a person starts his investment journey towards retirement, one must first make sure that he has that ability to take risks. And one measure of ability to take risks is time horizon, but another good measure is to make sure that, well, you're financially healthy. There is a pretty good tool on the MoneySense website. It's a financial health self-check tool, and I actually encourage people to go and do it just to make sure that you are financially healthy before you start your investment journey.
Someone who is financially healthy and ready to invest should first consider his or her risk appetite.
How do you know your risk appetite? Well, it's by understanding the 3 factors. Firstly, you need to understand your need to take risks. Secondly, your ability to take risks. And thirdly, your willingness to take risks. Your need to take risks is determined by your need for returns. So if your need for return is high, then your need to take risks is high. Your ability to take risks is determined by many factors. If you have got a long time horizon, then your ability to take risks is higher. If you're single, your ability to take risks will be higher. If you're well insured, then your ability to take risks is higher. The third factor is your willingness to take risks. It is affected by your investment literacy. If you understand investments, you will be more willing to take some risk.
Home baker Melody thinks she has a low-risk appetite. She counts on financial advisors to help with her financial planning.
She checks in on me quite regularly and helps me adjust what I need according to different stage in my life. I can say I'm conservative. I do have endowment plans. I have investment plans. In general, I don't actively trade stocks and shares, but I do invest on a long-term basis. And I do find that I have pretty good gains. In terms of my investments, they are still rolling. And I do have some investments which are flexible and I can actually withdraw the money if I really need to.
Melody is a cautious investor who has built her nest egg over many years. How can she ensure that her gains remain protected?
The key risk is volatility risk. That is the risk of the markets going up and down. And how do you manage that kind of risk? Well, firstly, you can diversify across asset classes, such as equities and bonds. Secondly, diversify across many securities. ETFs are good because it's low cost. It buys into hundreds of securities. And thirdly, invest in a regular manner. And what that means is dollar cost averaging, right? So instead of putting one lump sum in, you can actually put it over many months.
Like Melody, Norma is also growing her retirement funds through investments.
In terms of funding for my investments, most of it are from cash. Our focus is actually on having safe investments. So one of them is actually the endowment policies, that we have several. We also have investment-linked policies and equity funds. At this point of time, I have 1 or 2 stocks, but it's a bit risky. I'm not a trader. I am an investor.
Mandy?
Yep. Thank you.
I'm actually very encouraged that Norma said that she is not a trader, but she's an investor. Because most people who trade, they cannot do better than just simply staying invested. The thing I would say to her or advise her to do is, when she buys those funds, she wants to make sure that the fund managers are not trading, but investing for her for the long term. Norma mentioned that she invests into ILPs, investment-linked policies. Now, if she is buying for protection, she needs to understand that every dollar premium that she pays to the insurance company for the ILP, a portion of it goes into buying insurance for her. So that is not going to be invested. And as she ages, the cost of insuring her will go up, and that means lesser of her premium will go into investing. Now, most of these funds under the ILPs, they are actually actively managed. It is costly. Some of the investment-linked policies, they preload this cost, meaning to say that you pay these costs upfront, and if you surrender these policies in the first 10 years, you may lose money.
While Norma and Melody are long-time investors, Segaran is wary about investing.
I would not invest if I do not know about the product. So I'm thinking that if I need to put money in anything, I'll put it in a fixed deposit.
I think Segaran is absolutely right that we should not be investing in things that we do not know. If he's very conservative, I think he can consider CPF. I know he's already 66, but that's not stopping him from topping up his retirement account if firstly he has got excess cash, and secondly if his retirement account has not reached the enhanced retirement sum, which currently stands at $288,000. The first $30,000 is RA is going to give him 6%, the next $30,000 is going to give him 5%, and the remaining of his money in his retirement account is going to give him 4%. It's pretty good for something that is very safe. Now, after he has done that, and if he still has got excess cash, then perhaps he can bucket his money according to the time horizon that he needs the cash. So monies that he needs for the first 5 years, he can put it into very safe instruments such as the Singapore Savings Bonds, T-bills, Singapore government securities. Monies that he needs much later, like 10 years into his retirement, he can invest into equities and bonds. But it will be good that he learns a bit more about what investing into equities is all about before he makes that move.
Besides having a good investment strategy, one needs to be aware of investment scams. In 2021, victims in Singapore lost more than $200 million to investment and bank-related phishing scams.
It's a bit scary out there. People are out to cheat us. We must be wary of people who we don't know, who suddenly message us. We have to be very, very careful with our money.
There is a lot of scams that is happening. It could be a WhatsApp call or messages saying to invest in something. I feel that it's not safe.
Now, scams are one of the financial pitfalls that comes like a robber in the night to rob us of our hard-earned retirement savings. To safeguard against scam, ask, check, and confirm. If an investment opportunity is being presented to you, do ask as many questions as you need to ascertain the legitimacy of that product, such as how are the returns of this investment being generated? Who are the owners of the firm, for example? What is the guaranteed amount of interest, if there is any? How about check and confirm? Now, you can check on the internet, but we also want to make sure that the information is authentic. We have a financial institutions directory and an investor alert list. These are various portals that one can check to ascertain whether the investment company is authorized and regulated by the Monetary Authority of Singapore. Just because an investment company is regulated by Monetary Authority of Singapore, it doesn't mean that the product is risk-free. So a person will still have to apply his or her investment principles to decide for himself or herself whether or not to enter into this investment. If you would like to know what are the current scams, the modus operandi, or any anti-scam resources, you may go to scamalert.sg to find out more.
With vigilance and sound financial planning, Singaporeans like Segaran, Norma and Melody can enjoy their retirement years.
To retire smart and well, first of all, one must be healthy. At the same time, spend quality time with my family.
I think people must really take care of health, physically and mentally. A lot of us must also save more money. Also, it's not too late to invest.
To retire smart and well in Singapore, I feel I need to plan early and live within my means. Be open to wherever life leads you and to live life to the fullest.